Good afternoon. My name is Matt Doxa. I'm CEO of Excelsior Wealth Partners, and we are here for our monthly podcast. Last month, we took a deep dive into the world of annuities, and this month, we decided, as a result of that conversation last month, that we would tackle essentially how do you find a good financial advisor in the marketplace. I'm sitting here with our panel. I have Matt Champion to my right. I have Chris Wadsworth. I have Lou Geckel and our very own Kevin Christopher. What we're going to talk about today, and I don't know, once you get into professions, if finding a financial advisor is any different than finding a good attorney, a good CPA, a good doctor, what have you. Essentially, at the end of the day, we look for the very best partners as consumers in the marketplace to help accomplish what we're trying to accomplish in life, whether that's good health or good solid tax review in the CPA world. But when you get into the financial advising, it's a pretty interesting time in history to say what constitutes a good advisor. There's been so much press lately in terms of state-specific fiduciary rules, the SEC, and their guidance on full disclosure, and again, what constitutes a good financial advisor, not that they value judge, but essentially assisting the public with low-cost investing, and there's just been this renaissance, metamorphosis? I don't know. I shouldn't use words I can't spell and Scrabble. But there's been just a lot of publicity recently around these topics of where do you get financial guidance from? Is it what they would call a fiduciary? Is it pure? Should you go with somebody that represents a company? Should you use an advisor that's independent? Those are things we're going to tackle today. So buckle up, be ready. I'm going to start with you, Matt Champion, here in a moment, so ready yourself. But how do you find a good financial advisor? And I before I turn it over, I just want to break it down into what I see as a look behind the curtain and essentially what the options are. So, I might get into things myself, or we might cover in the back and forth here, credentials. Should somebody have certain credentials? Should I get a referral for my neighbor? I was on Facebook the other day and somebody said, hey, does anybody have any history, any experience with picking stocks? And then somebody started to give out their financial advisor. And I actually laughed because the financial advisor that was referred on Facebook works for a company where you can't do a solicited stock trade. And I was like, oh, geez, there's no way that the advisor actually knows that, or the client in this case, but I kind of chuckled. And then actually, somebody gave a better recommendation, and I'll leave it at that. What's the investment advisor, what's the financial advisor's investment philosophy? What's their philosophy? Are they an A-share person? Everybody goes into A-shares on mutual funds. Do they do fee only? I only charge a fee to manage your money, and that's it. Do I do $1,500 for a financial plan, all-encompassing? Maybe that's my thing. So those are some of the things that we'll talk about today. You could go to a place where you have your money in terms of a bank. Bankers weren't allowed to do financial advising until the repeal of the Glass-Steagall in 99, so a newer phenomenon in the banking world phenomenon. Wirehouses, been around forever and a day. Some of these guys are banks now, but I think we're down to 4 wirehouses. Insurance companies, stock or mutual. There's something to think about in terms of who they exist for. Is it the shareholder, the policyholder? Property and casualty companies, I don't want to name companies, but they sell a lot of financial service products these days. Independence. I am going to tell you right now, I have a little bit of a bias, and we're going to have to work through that. But the American laurel, the American tenet was, hey, you pull your wagon, I'll pull mine. I'm independent. I don't want no taxation without representation. I'm a big American guy, and I believe that independence without a company mantra are a halfway decent way to go. And then what's popping up these days a lot are the what they call RIAs, registered investment advisor firms, that aren't necessarily licensed with what they call FINRA, but they are with the SEC, state or federal. So I just said a mouthful. I'm going to turn it over. But Matt Champion, how do I find a good financial advisor?
So I think a lot of people, when they're looking for an advisor, the first inclination is to probably look at Google. Go to Google, type in advisor. But when that list comes up, then what? What are you really looking for? So some of the things you want to be on the lookout, I would say credentials is big. You mentioned some of the other professionals, but when you go to a tax preparer or a CPA, there's going to be different levels of expertise based on years of service, based on education, commitment, things of that nature. So one of the things you're going to want to look at is is the advisor credentialed? Have they done their education? Are they up on current trends in the market? The other big thing that I think you kind of hit on, but I would say referrals is a good source, but more importantly, talking to people that are in your similar situation, whether that's age range, whether that's financials, close to retirement, not close. I think getting a referral to somebody in your similar situation is going to be beneficial because that advisor has obviously worked with somebody who has probably some of the same concerns. So I think getting referrals is big, but make sure that the ones you're getting have also worked with people that are similar. And then the other thing I would recommend, whether it's, again, advisors or attorneys or accountants, is interview a few. I think it's a good idea to talk to 2, 3, or 4, really understand how they work. Don't be afraid to ask how they get compensated. Some advisors shy away from that, but I think the advisors that are on the up and up and are confident enough to have that conversation, you're going to be gravitating to. And then the last thing I think is you'll get a feel. If you get a few referrals or you get a few credentialed advisors from online and you interview a few, I do think you'll ultimately get a feel for who you would enjoy working with. Are your personalities compatible? Things of that nature. So those are just a few things that come to mind.
Ditto. Lou? No, just kidding. I'll add a couple of things there, but I mean, in all reality, you hit a lot of the points. I can add a couple of things. So I think knowing what you want out of the relationship is important and what's important to you about your money. And does the advisor that you're either being referred to or found on Google actually feel the same way you do? Can you align yourself? Can you have a good relationship with this person? Because ultimately it's your money, it's your goal. You need to be comfortable with them and trust them that you're actually going to get to your goal by working with this person. A couple biases for myself. I've been independent since 2011, and I think that's the best way to work. I also worked with an insurance company for 12 years. So not being pushed by the insurance company to sell a certain product, being able to be independent and look for solutions and not just products for a client, I think are extremely important things that you get by working with an independent advisor. The other bias that I'll have is that I think you should work with a fiduciary, somebody that is fee-based, not commission-based, that has to do 100% what's the right thing, not just what's compliant or what's suitable, which could mean a lot of different things.
You guys really hit on a lot. I would agree with all that. I think the only thing that I might be able to add is I would really try and figure out what you want out of the relationship as a client. Going into knowing what you want to accomplish first and foremost, and then with that in mind, asking potential advisors that you've either gotten on the internet, cfp.net, referral from friends or Google, or something like that, very specific questions related to your problem or your goals to make sure that advisor can actually help you get there. Kevin?
I'm going to have to agree with the group as a whole here. The things that really stick out to me is the fiduciary thing Chris brought up. You want to make sure somebody's acting in your best interest. And to do that, I believe you have to have all the licenses that you need to have, not just, the ability to use mutual funds or, annuities, but have everything available to you, be it, ETFs, REITs, individual securities. Just having all the different things available. I worked at an insurance company. Actually, I worked at two. And I've been an independent, and I've seen in an insurance world where they allowed you to go out and do whatever you want and act in clients' best interests. And I've seen them where they push you to, use certain products. I definitely think in the independent world, you have a lot more options and you're able to use anything that's available that's, a good product or solution for your client. And I also think when you're meeting with the advisor, you're going to be meeting with them regularly, semi-annually, quarterly. Make sure it's somebody that you're willing to have a cup of coffee with and spend time with, so that way you're not dodging their calls. That's just my 2 cents.
Nope, that's fair. I will kind of raise the stakes here a little bit and go a little bit more meat and potatoes. We had a lot of I agree around the table here. So I'm just going to shed a little bit more light behind the curtain, Wizard of Oz style. And what I'm going to talk about are things that you may not know. So, Matt here said Google search. Heck, the people that come up on top of Google, at least they usually have been around. Google has that algorithm. These people are probably trying to market, at least they have a concerted effort to be on the top of Google as opposed to not even be there to talk about a sales engine or a search engine. But when I get into the categories of banks, wirehouses, insurance companies, whether stock or mutual, P&C companies, independents, RIAs, should the client do it themselves? Should they use Vanguard? Should they use E-Trade, Ameritrade? There's all these, these combined. A lot of these are strong survive in the E-Trade world, but there's a lot of do-it-yourselfers out there that could do this stuff. But at the end of the day, here's what I've learned recruiting for the last 20 years, working with clientele all over, is these companies have agendas and they also have a lot of exposure. So let's suppose I'm a top 50 financial company in the United States. I probably have a lot of market exposure. I probably have a litigation exposure. I have a lot of complaint exposure because I have deep pockets. I have a lot of clientele. I have a lot of advisors. So in my opinion, what tends to happen, the end result, the financial advisor can be pigeonholed, can have constraints put on them because the insurance company, the wirehouse is so scared of being sued that they don't allow solicited stock trades. They famously, Lou, a wirehouse just went from, hey, you can do A-share mutual funds 5% up front to no, you have to do fee-based, and then they reverse that. If I'm a client, I'm sitting there in a ping pong match going, what are you talking about? I've done A-shares forever with you, now I can't? That isn't the advisor's fault. It really isn't. You'll see when this Department of Labor came out in New York State, some of these companies just literally tightened up, and it was because they were afraid of being sued. I mean, they really were. So I don't know how you measure that as a client, but I think you have to know who you're doing business with in terms of what they're allowed to do and not allowed to do as a financial advisor. The agenda of the company. If I'm a protection-based company and I want to sell permanent life insurance, there are a bunch of good advisors that work for those companies, but you should probably know that as a consumer that wrap accounts or fee-based is where the company wants to go, and they might not do business with somebody that has below $250,000. You might be what they call a house account, a 1-800 number. I think you need to talk to somebody. Heck, come talk to me. I'll fill you in on this and give you some direction on this stuff. But I think some of it is difficult. You work with a financial advisor that you're not even aware doesn't have a Series 7 to be able to do stock trades. Owning stock is the most basic thing in the world. It's how financial wealth. It's how the Rockefellers got ahead, for heaven's sakes, right? He's got a little good old fashioned market exposure, but you wouldn't know that unless you knew where to look. Platforms. You might spend $7 at E-Trade on a stock trade. You might spend $250 at a wirehouse. You're paying for, I guess, the expertise and the service, but what if you came to the broker and said, I want to buy Apple, and they charged you $400? I don't know. Is that the best use of your dollars? Platform fees, these are things I wouldn't expect the client to know, but if I charge you 1% to manage your money and it ends up costing you 1.5%, where did that extra 0.5 go? everybody scores it a little bit different. You wouldn't know what you don't know. So these are things that I would, Matt, let me ask you that. So here's the question at hand after all that ramble, is how do you know where to go to find these questions that if my grandmother walked in here, I'd want to protect her and say, listen, here's what I know. Here's some of the ways that companies do business. You might want to know this going into it, but knowing that she would have no clue where to look to know if somebody has a Series 7 license to do a stock trade, or know that they have, 50 bips on a platform fee that's really, whether you have $1 million or 200, you're paying the same fee. What? That doesn't even make any sense. Matt, where would I go to find information that I would need as a investor?
So, there's a few different places out there that, in terms of listing, licenses, advisors, what licenses they have. But to your point, I think the big thing is just knowing what questions to ask. That's the tough part, is not knowing what you don't know. But there's a website out there. If you Google broker check, you can look at different licenses that advisors have. That'll talk about years in the business. You can also see if they've jumped around from company to company. But there's a few. That's one site where you can go to kind of see the history of that advisor.
Don't forget. Go ahead. You could also go to cfp.net if you're looking for financial planning advice. There's the CFA designation at IMCA. No, it's not IMCA anymore. I don't know where you go to that.
If I don't know what a CFP is, Lou, you probably can't hear me very well, but what's a CFP? Why are you so heck bent on CFPs?
Well, CFP is a certified financial planner. There's very strict criteria to carry the designation. You need to pass 6 financial planning modules, and then you take an 8-hour comprehensive exam taken over 2 days. You need to pass with a 70 or more, I believe. And it's pretty intensive and rigorous qualifications. Plus, there's ongoing continuing education that you need, 32 hours every 2 years, 16 a year, which most of them have. It's kind of like CPEs, which is what accountants take, and CLEs, which are what attorneys do.
So, if I'm hearing you correctly, Lou, it sounds like you're pretty comfortable with the expertise level, at least a credential version of the certified financial planner. And some of this stuff is there's a joke that says, hey, if law school is so difficult, how come there's so many bad lawyers? And I believe that in some regard, and I don't know that financial advisors are any different. I think gentlemen like Bernie Madoff didn't help anybody. Even, you know what? That one comes up a bit on the Bernie Madoff, the fact that organization actually held clients' assets. That's a big no-no. You should look for a third party, Pershing, Fidelity, what have you, to actually hold, custodian these actual assets. If the advisor every year is returning 20% above the market, and is holding the assets themselves, you may want to take a hard look at that. If it's too good to be true, then maybe it is. But I'll tell you what, a lot of famous people, a lot of notable people went for a ride with that Madoff fella, and that didn't help anyone out. But, I would say that this isn't easy, but if you decide to actually do some legwork, interview some different folks, get a comfort level, look them eye to eye. I'm a big believer that your financial advisor should have been there, done that. Either they should have had a Roth themselves, trade stocks, done a backdoor Roth IRA, done non-qualified, made it, if I'm a high net worth individual, I probably want my advisor to be a high net worth individual, or at least have a lot of clientele that are high net worth, because how do they know your scenario if you're not? They're just kind of winging it, I would believe, if you haven't been there, done that. So, I don't know. It's not an exact science, but there's some ideas. Once you get online, today we live in a ton of data. some of it's just a smell test. Meet a couple different financial advisors, take a look at what they do, see what kind of a success levels they've had, and then you just got to draw a conclusion. One of the best compliments we receive in this firm is when we do seminars. People say your answers are just so confident that it's, attractive. We just know that you have been there, done that. And when I hear that, I say, you know what, thank you. It's, I don't know how that looks sitting in the crowd. It doesn't feel like that when you're up there presenting. But when somebody asks you a high level question and you know it within a second, there probably is some confidence, like a good attorney who will tell you, yeah, here's what you're looking to do and here's what I think you mean. Changing gears a little bit. Once you find a financial advisor, once you're comfortable, once you've figured out the criteria that work for you and your spouse, if that's the case, what is the best relationship to pay? So here's what comes up all the time. How do I pay you? You've done a great job for me. I'm at a seminar. I've done some marketing. I really like what you're saying. How do you get paid? So that one comes up a lot. So Matt, I would go around the horn again and I would say, what's the best way to pay a financial advisor? What's the best relationship? What should you know as a client? And we alluded to some of it, fee-based. I charge, for instance, 1% assets. I'm tied to your success of whether your accounts go up or not. I charge a flat 1%, and it's pure. There's no commission necessarily in my mind to say I'm trading your account for this or that. It's pure, but yet there's a lot of advisors out there that don't use fee-based accounts. They use A-share commissions. I can have an American fund for 5.75% of my 20,000 that I invested. Some people we alluded to earlier, you could charge $1,500 for a comprehensive financial plan. Maybe that's the way to go. I don't know. So Matt, I would ask you that question. We kind of alluded to some of the, commissions can be all over the place, highs and lows. What say you in terms of Grandma Champion comes walking in here, you're not in this business, but you know what you know. How do you advise her as to what to pay?
So I guess we got to help Grandma Champion here. So tough question. I think the scenario kind of dictates, but again, similar to when you're looking for an advisor, there's questions that you should ask. There's things that you should look at. The benefits of some of the strategies you just talked about, where you might have an advisor that charges a fee for their time. At least in my opinion, you're going to get good advice. You're going to get solid advice because there isn't necessarily a commission tied to a product. There's not a ulterior motive for a recommendation. You're paying them for their time as you would, a good attorney or a good accountant. So again, I think the situation really dictates, but getting paid for your time is good. There's a lot of accounts, you kind of hit on it, managed accounts, fee-based accounts, a lot of different names out there. But this might be the ugly truth about the industry is those accounts tend to get paid more attention to. They tend to be more actively managed versus maybe to your point, a mutual fund where somebody paid a one-time upfront charge. The advisor captured a commission on that, and now they're on to the next client. At least from my experience, these accounts that have a fee associated with it, where the advisor really has a vested interest in growing that asset, those tend to, like I said, get a little bit more attention. And I don't think that's a bad thing. I do think that when I explain those types of accounts to clients, they actually ask that question. They'll say, so if my account does better, you make more money. I say, absolutely. It's the same percentage, but it's on a bigger dollar amount. You're happy, I'm happy. It's a win-win. So, those I think can be beneficial for the clients.
Grandma Champion needs to pay a fee, period. And that's all there is to it. No, really, why would you want to pay a fee instead of a commission? So you get an advisor that's not chasing commissions, and it's very transparent, right? So you know exactly what you're paying. When you're paying a commission, sometimes that's coming from the company, sometimes it's coming out of their account. They're not transparent. You have no idea really what you're paying unless you're paying very close attention and you're willing to read prospectuses and go through everything that clients really are not willing to do. The other thing I would say there is that it ties the advisor and the client together. yes, you want to grow that asset. It behooves you to, you don't lose that 1% if the market goes down, but you're making 1% of less. So obviously the advisor wants to grow it. The only conflict of interest that I'll give you on something that you want to look for is trust level with your advisor if you're paying fee-based, because once you actually need the money and you're taking the money out, they start losing revenue at that point too. So, just find somebody that you trust that's looking for your best interest, because there is no real perfect solution, but Grandma Champion still needs to pay a fee.
It does.
I'm going to go contrarian here. I'm not going to say that fee-based isn't a great thing, because it has its place. I don't like charging for plans. I have the licenses where you're allowed to charge for a plan, but if you're doing the right job for your client, a commission-based product might be the right thing for a client. And you're not going to know that without sitting down and figuring out what the client's trying to accomplish. Annuities.
What commission-based product can you do that you can't do in an advisory?
There's few annuities that are fee-based annuities. Now, you can take a trail option on annuities so that you are tied to the ups and downs, and I think most advisors do take trail options on their annuity products because of the fact that they're trying to create a stream of income from the clients, like the fee-based accounts. The other thing that I'd like to say here is that the fees, are you getting what you pay for with these fees, right? Are you just getting 1 year? If you're paying 1.5 to hear from a client, an advisor once a year, say, hey, how you doing? Oh, that's great. Here's a birthday card. Are you really getting what you're paying for? Or are you better off paying the small upfront commission on an 8-share mutual fund that the fund manager's actually making those trades? So I think that there's a place for all these products. You just can't put a square peg in a round hole. That's my take on this.
Kevin was fired up on that one. That was good stuff right there. You guys aren't in the war room here, but looked like a front row to a Gallagher show. There was some spit trickles coming out there. It was really good stuff. Here's how I'll end this. Today's a quick, short kind of piece, because I don't know that there's a smoking gun on what constitutes a good financial advisor. I will end how I started with, there are a lot of professions, and this is the age-old question, is where do I find, we were in the process of picking up a $2.2 million account with Schwab, and the client said, geez, I have $2.2 million and I don't even get a phone call from Charles Schwab locally here in our marketplace. And my jaw dropped. There's a lot of advisors that would call you twice a day, every day till Sunday with a $2.2 million account. But that's their world. The advisor, for whatever reason, doesn't call them according to the client, if you take the client at face value. So I would like to say that we could have did this conversation, Chris, about finding a realtor. And I would say it's kind of similar. Go work with one of the folks in town that sells a lot of houses, right? Who wants to work with a realtor that sells one house every 3 years? Right, they're not busy. They got a lot of time. Maybe that's a good thing. I don't know. I would say on a realtor, go look at the last 10 houses they've sold, and if they just keep dropping the price, and that's how they sold your house, if you list it at $400K and they drop it to $1, it takes zero talent to do that. So maybe you don't want to work with that realtor. I don't know if it's the same thing with financial advisors, but I think there's a famous quote that I won't I'll paraphrase. It's essentially, you know it when you see it. It's hard to define, but you know a good financial advisor if you do your homework when you see it. And I think all the above, it's commissions, it's philosophies, it's track record. You have to make a determination on whether you want to work with it. I think that a lot of financial advisors are sales reps. And what I mean by that is they represent the company And that company will tell you what they want to sell. They want to sell variable annuities. They want to sell permanent life insurance. So you're sitting there trying to roll your 401k over and somebody's talking to you about life insurance. It's not going to take you too long to figure out what the company's looking to do, how the managers get paid, how, where the company's bottom line and biggest margins are. So I think you're going to have to do some homework. I think you're going to have to jump on the internet. I think you're going to have to talk to some people. And we can be a resource. We really can. Whether you did business with us or not is irrelevant. I've recruited and managed hundreds of advisors for the last 2 decades, and I will tell you flat out, I've seen some horrific financial advisors. Lazy, don't go above and beyond. They're there to cash a paycheck. You haven't heard from them. They're curmudgeon, and nobody wants to work with those folks. And then you got this. It's the same in life. You got this 1, 2, 3, 4, top 5% that just stays relevant, works hard on their practice, gets the credentials, has multiple ways they can charge. It's not just a one-stop shopping. It's if you're not a fee-based client, then here's some different ways. Yeah, I'm transparent as you might not get my full effort, and here's what you get a la carte, but you pick. Maybe you don't want me to come into your house once a quarter because you just don't want me at your house once a quarter. And that's your prerogative, but I think those are the things that you have to look for in terms of finding that good advisor. Because here's what I will say, is a good financial advisor is life-changing. They really are. They will give you ideas, they will go the extra mile, and then there's not so good financial advisors that also life-changing in the wrong way. So, I feel like we just spent a half an hour, and I don't feel fulfilled like we gave you that smoking gun or the silver bullet of here's exactly what you need. But I think it's, where should my child go to college? That's a friggin' tough question. You know what I mean? It depends on their experience. It depends on a whole multitude of different things. And I don't know if you just go pick Harvard over Yale because it doesn't work like that. But if you have a bad experience at college, to use that analogy, you're like, man, how did I get involved in that one? Maybe that was on me. Maybe I didn't do my homework. That's what I would equate finding a financial advisor to. So any last points of parliamentary procedure, anything you would say to the fine people in the Northeast that are our clientele as they try to find what can be a tough decision financially?
So what we did cover is when you're meeting with an advisor, be honest and upfront about what you're trying to accomplish, and when they're asking you questions, give them the answer, like the right answer, your answer. They ask, if you're aggressive, you're moderate, if they're going through these questions, it's to build a plan. And if you give us garbage information, we're going to end up giving you a garbage plan. It's garbage in, garbage out. So, take your time when you're doing this and really think about the questions you're being asked by the advisor and what it is you're actually trying to accomplish.
Well said, Kevin. Anybody else have any final shots before we part ways? All right, this took about 30 minutes. Hopefully you found this information useful. We will be back on next month with a new and hopefully relevant topic. I appreciate your time as always.